Right. Freeport McMoran says it's on track to fully restart that mine. Another look at the stock. You can see it has shot up almost 50% in the past year because it produces a fair amount of gold as well. And just a reminder, the International Energy Agency ramping up its forecast for demand this year. Let's get more from a seasoned observer, although he's still in the first flush of youth, Bob McNally, founder and president of Rapidan Energy Group. Bob, great to see you as ever. Thank you very much.
Great to see you, Andrew. Thank you very much. Good to see you.
What's driving oil right now? I mean, it's just, you can take your pick almost.
You know, Andrew, in some ways, for the last year, the trend has been your friend. Crude oil prices have been sliding since President Trump took office a year ago when they were above 80. And this slide reflects a developing surplus in the market. There's a debate about how big and how soon and so forth, but that's the trend, that's the direction. However, as we've recently seen, this downward trend is punctuated by geopolitical spikes. The June war with Israel, President Trump's sanctions on Russia in October, and just recently we've seen, and not fully unwound, a big price spike, a meaningful, $4 or $5 on Iran risk, which is quite serious. So we're still in that trend. As you mentioned, IEA revised demand up a little bit, but they still see surpluses. So for the foreseeable future, we think, barring a big geopolitical disruption, we're probably grinding lower a little bit, is the outlook.
Grinding lower, but as you note, there's a risk that the U.S. and Israel, I say a risk, a chance that the U.S. and Israel will have another go at Iran, and that would be likely to cause an automatic rise in oil.
At least initially. Now, traders have learned to fade or to downplay any geopolitical risk, including Iran. Even when Iran attacked Saudi Arabia's Abqaiq facility in 2019, we had the biggest open ever in Asia in crude, but it quickly unwound. And since then, we haven't seen these outbursts of violence turn into a severe, sustained disruption in oil supply. However, I tell folks, the story of the village boy who cried wolf didn't end well for the boy or the village. And Iran, the regime is on its ropes. President Trump is amassing a huge military force. And Iran, unlike Venezuela, poses a no-kidding material risk to not only crude, but even LNG supplies. So we only have about a 1 in 5 chance of a sustained material disruption. We think President Trump is likely to hit Iran in the coming weeks. However, we don't see 1 in 5 of a sustained disruption. But if it happens, it'll be worse than most people expect.
I mean, they wouldn't be able to close the Strait of Hormuz for long, you would assume, but any threat to shipping could curtail supplies.
Well, I think they could close it for longer than people realize. The United States spent 52 days bombing the Houthis in April and failed to open up the Bab el-Mandab. President Trump actually congratulated the Houthis on their resilience. Iran has much better weaponry and a better coast to operate from. So it would not be over in a couple hours or a couple days. This would not be the first Gulf War, the second Gulf War. I think traders would be surprised. Ultimately, we would open it up. You're right. But it would last for longer than folks probably think.
I chuckled there when you said President Trump congratulated the Houthis. I know it's no laughing matter, but he always manages to surprise you. And give us your thoughts on Venezuela. Apparently, something like 12 million barrels of oil are already on their way to the United States. Pretty rapid.
Yes, things are starting to move in Venezuela. The parliament is meeting and passing an improved hydrocarbon law. We're disposing of that stored 30 to 50 million barrels that was supposed to go to China. Now it's going somewhere else. The administration is working with the new leadership under Delcy Rodriguez. So, it's one thing to entice these long-term investors, these big companies back in to make tens of billions of dollars. That's long-term. But in the near term, they're moving along with some alacrity and starting to get some results.
Bob, thank you very much indeed. Really appreciate it.
Thank you.
Bob McNally of Rapidan.